Okay, good evening, everyone. Good evening, everyone. Please kindly confirm if you can hear me. Just press Y if you can hear me. Just type Y. Can you guys hear me? Are you guys there? Can you guys hear me? Okay. Thanks, Victor. Okay, yeah, thanks. Yeah, so good evening once again. Yesterday we were looking at the Binance platform and we tried to get ourselves familiar with most of all the features available on the Binance platform. And today we want to continue, and then we want to continue um, from where we started. Yesterday we were supposed to start with testnetbinancefeature.com, which is the demo page of trading. So, like I said yesterday, it is true that traders make quite a lot of money trading the crypto market, and with very little amount, about $200, you can make 100% returns trading the crypto. But it is how will I explain it? It is a double way. It is double way. It is double-edged sword. If you can make that kind of money, it means you can also lose that kind of money. So you want to really be sure that you are ready to start trading with your money before you then put in your money. So it is very essential that you practice and get yourself accustomed with most of all these things. And then by the time we go through the trading techniques proper, you try to backtest the trading strategy and assume you are going to assume that you are taking those trades, and then you put those trades right there in the demo accounts to try to test how your progress is before you then decide to go live with your money. So yesterday you've been able to see how to fund the crypto wallet and how to use it to purchase different currencies that you want to invest in. But right now we are tilting away from the investment part. We are tilting towards the trading part. And so today we are going to look at the Binance demo page, and then we are going to look at the Binance app on the Play Store. We'll download it from the Play Store, and we'll look at most of all the features that we have there on the app. So let's just go. So you go to your browser, and then you type in testnet.binance.com. That's testnet.binanceFutures.com. Let me quickly share the second screen. Hold on 1 minute. So because we want to trade, because we want to trade on futures, we want to practice on futures, we are going to use the testnet.binancefeature.com, testnet.binancefeature.com, and then you press enter. So once you click on that, it's going to take you to this environment. It's going to take you to the same environment that we are already familiar with, which is this right now. And so all you just need to do is to click on register if you are just starting at first. So you just click on register, and then you put in your email address, and then you put in your password, and then you just click I am 18 above, and then you click on create account. And that's just all you need to do on the testnet. The only last thing you just need to do is to go and confirm this registration in your email. Let's quickly go there and confirm our registration. And so right there we have confirmed our registration. All we need to do right now is just click on login, and put in our username and password here, and then we click on login. So immediately we do that. Once we do that, it should take us to the same environment that we are used to. And right here, we have $100,000 to trade it. So you're going to be given $100,000 to practice with. This is very, very good. It's a very good thing. It's very good for us, so that we can familiarize ourselves with the environment first before we then start taking real trade with our own money, especially since we are relatively new to the trading environment. Remember that the crypto market is a very volatile market, and a very small movement against you can wipe away your entire capital. And so that, which is why you don't want to just quickly just jump into trading with your money, but we have looked at how you can buy some coins and keep. So for the meantime, that is something you can do. And then if you then plan to take trades based on the opportunity you see in the markets, then you first need to familiarize yourself with the environment and make sure you are very comfortable before going live. Now, trading is not for everybody. It's not for everybody. By the time we go to how to take trades and how to analyze the market, that's when you make a decision if this is going to be for you, or you just want to just simply stay on the investment part of cryptocurrency market. So before we go into taking trades right now, let's quickly get familiarized with you can see right here we have trading rules and we have preference. So let's first go to the trading rules. Upon clicking in, this is what you see. So it's just like a future, the features or the trading rules as it applies to Binance future contract. And the minimum trade amount, as you can see here, is 0.001 BTC. That means you cannot take trade less than 0.001 BTC. If you don't have that equivalent in your wallet account, it's not going to go through. The minimum notional value, which is about $5. So it means that if you don't have about $5 your trading account, you won't be able to take a position. But of course, it's going to be possible if you are going to be leverage trading. But then don't take too much leverage when trying to approach the futures market. So these are just like the features or a guide of what the Binance future contract is, you can see that the maximum market order is 1000 BTC. So it means that at any particular point in time, you cannot trade more than 1000 BTC. And if you ask me, this is quite huge, and they know why they have to put this limit there, because of course there are some people that have more than 1000 BTC, and they know when to push those kind of BTC in the markets to force price in certain direction. And then the maximum open order is 200. So that means if you are taking orders up and down at the same time, the maximum order you can have open at any particular point in time is 200. And then if you look at here, you can see that we have price protection threshold 5%. So if you place your mouse around here, you will see that they wrote there that after enabling price protection, you're actually going there to go and enable price protection to see what that is saying. So, but with the effect of this is that we have a 5% threshold right here as a protection. If the difference between the last price and the mark price of the contract exceeds the threshold, which is the 5% in this case, when the stop loss or take profit orders reach the trigger price, the stop loss or take order will not be triggered. So this is very useful or very instrumental when price is highly volatile. That means price is moving aggressively in one direction and then coming back immediately when it gets to that direction. So what we are saying here is this: in those kind of high volatility period of market, if the difference between our stop loss or take profits and where price has gotten to is not more than 5%, then our stop loss or take profit is not going to get triggered. It's just a way to protect ourselves. We can work for one and it can work against one. So if your stop loss is supposed to get hit under that period, it may not get hit, in which case you benefited from that price protection threshold. But if it's supposed to be like a take profit area, and then a 5% rule also apply, and then price gets to that area and it didn't take you out in profit, only for you to then reverse maybe to your entry or even to loss, and then it can work against you. So you decide what you want at that period. So let's go to preference. Now under this preference, the first one that we have here is order confirmation. So you want to select whether you want Binance to tell you to confirm your position before they are triggered. And this is also very, very useful, so that you by yourself click on yes, that you want it to be you want it to be affected before it goes into trigger. Now how will I explain this? There are sometimes we make mistakes, and then you want to click on sell, for instance, and then you immediately click on buy. If you don't have this order confirmation on, price is just going to immediately just get open, and then you will start panicking. But if you have this, just like a second level of confirmation before that trade is taken. So you can just select them on. But if you know you are very comfortable and you know you hardly don't make those kind of mistakes, then you can leave them off. And then position mode. Now under this position mode, you can see right here we have one-way mode already activated or selected for us, and then the hedge mode. Now the difference between the two is very simple. Under the one-way mode, it means that if you are taking a position, let's say you are in a long position, you are buying Bitcoin, and you want to take another position, you can only take a buy position because you have selected a one-way mode. Now, if you are in a buy position and then you want to then take a sell position, the sell position is going to be as if it's going to take you out. It's going to be setting it like a stop loss or take profit. It's not going to be opening another position in the opposite direction. Now, if you select the edge mode means that if you're in a buy position, for instance, you can also decide that you want to be on a sell position, and which is what we call edge. Now, edging is a different tactic on its own, and it's usually used for risk management while trading. So, for instance, let's say the price of Bitcoin has been going up and up as it has been going. And then in 2017 December, which we had the highest before it eventually came down to this level. in 2017, if your price analysis, if your market analysis showed that price is going to be coming down before it then continue going up, and you have a buy position, let's say that you have a buy position around here, you bought for a very long time, and then around here you feel that there'll be lots of sell activity in the market to force price down. Instead of you to close this your buy position, you can decide to take a sell of the same amount of volume of transaction that you have taken from the low. You can decide to take a sell around here so that it will protect you against this flush that's going to happen in the market. And when the flush is done, you can decide to close your sell position and then leave the buy, this initial buy, you leave the buy to continue riding higher and higher as we have currently right now in 2021. Or you can take a new buy around here to add to your position. So you want to first have a good understanding of what edging is, and you know when to edge your position before you select this edge mode. Otherwise, you don't really want to bother yourself about that at all. So by default, it's usually set on one-way mode, and I will advise you to leave it at the one-way mode. Then price protection. Now, this is the price protection that has been selected automatically or enabled for us. But if you don't want that price protection, you can decide you want to off that price protection. But it's usually effect. But if you feel that you are going to be able to manage your position, you are usually online to manage your position and close it when necessary, then you can off this. The notification, you can decide you want to get notified whenever price has gotten to your stop loss or SL as triggered, or when your funding fee, whenever you made a funding fee, you funded into your future wallet or anything, it's going to get, you want to get a notification. You click on that right there, or you can decide you don't want that. By default, it is not set. And then asset mode. Also for the asset mode, you don't really need to change anything about this. And the difference between the two is what has been explained here, that if they are open positions or open orders in the US dollar, USD stablecoin margin features, multi-asset mode cannot be activated. Multi-asset mode only applies to US dollar margin features. Now, before activating multi-asset mode, please send the guide in detail to better manage. You understand, you don't really need this part, but if you feel that you need the multi-asset mode part, you can click on that. But I would just advise you to leave it on the single asset mode, and then after you are done, you then click on confirm. So most of all the changes that you have made is what you are going to be experiencing by this. So now that we have a good understanding of most of all the features right here, we understand all this, we understand the chart environment, we understand the order book and how they play, we understand the margin ratio, the maintenance margin, and the margin balance. We know the balance and all those things. The only one left for us right here is this area, how we are going to be taking our trade, considering the limits order, the market order, or the stop market order, and this is the stop loss and reduce only. So I'm just going to explain this part for us, and then we then go into trading strategies. Now, before I go into those information, you can see right here that we have 100,000 USDT, and that's just like the key difference between the futures market that we are currently on right now and the spot market. Under the spot market, you cannot just take any trade if you don't have Bitcoin in your wallet in the spot market. But under the futures market, you don't need to have Bitcoin for you to sell Bitcoin. You don't need to have Bitcoin for you to buy Bitcoin. And so that's to give you a good understanding of the difference between the spot market and the futures market. Right now we have USDT. we can decide that we want to sell Bitcoin despite not really having Bitcoin in our wallet. So what I'm saying here in essence is that if you have done your analysis and then you feel that the price chart of Bitcoin is going to go up or down, you can simply just go with the buy long or sell short right here without necessarily going to first purchase Bitcoin to take your trade. Now, the buy long will mean that you have analyzed the price chart and you feel that price wants to start going up. So when you feel that price wants to start going up, it means that you are thinking of buying it. You feel that price wants to start going up. Let's say there's a pullback and then price wants to start going up from there. It means that price wants to be going long. You understand? So you want to go long. That is what it means. You want to buy that position as it is going long. You want to buy it as it's going long, or just for short, you want to go long with market, and that's what you have right here. And then sell short when price wants to shows when it shows tendency of start going to want to start going down, you want to sell it, and then we call it sell short. Is that how you say you want to sell it or you want to short it? So you want to short it means that you want it, you feel it's going to be going down, and so you want to short it. So long for up and then short for down, and so it means that buy for up and then sell for down. That's just what these two buttons means right here. So immediately you click on buy or sell, it's going to affect your position right there in front of you. And so it's just as simple as that. If you we are still going to get to that stage where we'll analyze the markets to be able to know if price wants to go up or down. You just take it one step at the other. It's not something that is just that easy and very automatic. No, it's something that you need to take your time to look and practice quite well. And so now that you understand what buy long is and sell short is, this is what will determine how you want to take that trade, whether you want it to be before or above the current market price, whether you want it to be at the market price. That is, immediately you click on buy, it should take it where price is currently is. For the first one, the limit is saying that you feel, let's say for instance you want to buy, and then you feel that price is going to first come down to this area. Price is going to come down to this area before it then goes up. So you want a limit order around here. That means you want to set a limit order for price to get to this area before it then goes up. Now it's going to be different from someone. It's going to be different from someone that is taking a buy setup around here. The reason is that if price is going to first drop before it goes up, the person that are taking the position around here is going to first be in loss before it then possibly start going into profit. And sometimes it would have taken you out in loss before price then start going in that as you expected it. Now, if you feel that price is going to first come down before it goes up, and what if price actually did not come down to this area, that price only just got here and then start going up? So you really want to be sure of the price level at which you want to take your entry before you decide on whether it's going to be a limit order or it's going to be a market order. So if you feel that price is not going to be going down at any particular point in time anymore, you can just go with the current market price, and then that means you are going to enter the price exactly at where we are right now. And we have different types of limits orders, which is what you're going to eventually get to see very soon. We have different types of limit orders and stop market orders right here, and we are going to go to explaining them very soon. So first, let us start with a market order, which is quite the simplest one, and let us adjust our I think 20x is not bad, but we can just for sake of mathematics, let's leave it as 10. And so the information you have right here, as you can see, the information you have right here is that we can buy about 19.8 Bitcoin, roughly 20 Bitcoin. However, look at how much we have in our trading account. We have 100,000. By without any leverage, if our account is not leveraged by any amount at all, we are only supposed to be able to buy just 2 Bitcoin. The reason is because, or even less than 2 Bitcoin. The reason is because the current price of Bitcoin right now is just about $50,000, and then we have $100,000. We are only just supposed to be able to buy just about 2 Bitcoin. But because our account is leveraged right here by times 10, which is why we are able to buy almost times 10 of that, which is about 19 Bitcoin right here. We can buy 19 Bitcoin, or we can sell 19 Bitcoin. Now, if you feel that price is going to start going up in this direction, what you want to do is to state how much of your trading account you want to trade with. You state how much of your trading account you want to trade with in this area, or you can use this slider that you have right here. You can use the slider to select exactly how much you want to risk. By the time we get to money management and risk management trading techniques, you understand why this is very important. So for instance, you are risking 5% of your account, and by that 5% of your account is equivalent to roughly just about 1 Bitcoin, and we are only going to pay just around $5,000 for that. And this wouldn't have been so if our account is not leveraged. If our account is not leveraged, we'll be paying $50,000, and we're paying $50,000 for 1 Bitcoin. But because our account is leveraged by 1 to 10 times, that is why we are only just paying roughly around $5,000. And then you can see the equivalent of that $5,000 here, which is 19.9 Bitcoin, 19.9 BTC. And so once you have said this, you are risking 5% of your account, and you check that everything is okay, then you click on buy long. Now, when you click on this is what happens. It takes you to this area, and Binance is going to first test your knowledge to be sure that you have a good understanding of what the market is. So you need to pass the quiz with 100% correct before you start trading futures. Now, if you don't have that good knowledge, you can go through this information this video right here. It's going to explain some of the questions that they're going to ask you. So if you finish watching the video, then you can go to start quiz. So right here you can see the question. The first is, what is the maximum leverage available on Binance futures? And that one is quite very easy, because we have been able to see that the maximum leverage available is 125 times. And so what you're going to do is to just try to answer all these questions. And now the reason why I don't want to go through this for you, because it shows that you are going to be having expo to getting it. You can always want to come and copy what I'm saying right now. So I'm going to just pause this recording or this screen right now, and then I'm going to finish, and then by the time I'm done, we'll continue from there. So I want you by yourself to assess that question whenever, because even if you fail it, Binance is going to show you the right answer, and for you to click it and then proceed. You just want you to be aware of all those things. And so you just then click on buy, and immediately you click on buy, you can see what happened here. You can see that we have your position right there that has been opened right in front of you. And if we go to the lower position of the chart right now, you'll be able to see what you have taken. This is the BTC USD perpetual contract, and your leverage is 10 times. Your account is 10 times. This position is 10 times leverage, and you have bought 0.993 BTC, and then your entry price is about $49,917, and then the mark price $9,916, and then the liquidation price. The reason why you are not having a liquidation price right now is because we are trading with quite a huge amount of money, and so you're just like saying the liquidation price is infinity, for instance, but it's not going to be infinity. By the time you set your stop loss eventually become your liquidity price. And then your margin ratio right now, which is the ratio of the maintenance margin and the margin balance, is just 0.2%. And you know, this account is good right now. You can see the radar right here. you can see that you are just 0.2% in risk of how much you have taken in position. So it's still very healthy. But if you are trading a very low amount, like say $200 or $500, you're going to be getting something completely quite different. Perhaps this is going to be about 5% or 7% or thereabout, depending on whether price is going in your favor as you enter the market or against you. Now you can see how much have been taken out of your account as margin, which is about 4,954 dollars, and you are on a cross. You are on a cross risk. That means that they are going to use the entire amount. They are going to be Binance is going to be using the entire amount you have in your wallet as collateral. I'm going to be using the entire amount as collateral, and right now we are just about $24 in loss, and the equivalent of that to our current account balance is just 0.42%. And then you can click on this if you want to close your position immediately at the current. It shows this amount right there, and then you can adjust that. You can see it has already closed because I didn't set the limit amount at which I want it to close, and so it's going to assume the best available price that is close to the current market price. So let's do another one. Let's say, for instance, that we want to sell. We have done our analysis and we feel that price is supposed to go down, and we want to risk about 5% of our account. We move this one to 5%, and then we click on sell short. So as you can see, if you want to take the trade right now, you can see that it's costing just about the same thing, just right in front of us before. And then this is where you can see that we have, this is what I wanted to explain to Ross before. You can see that we have something like a pen around here, something like a viral around here. So if we click on it, it's going to take you to this area where you'll be able to set your stop loss and your target. Now, this is going to be a very important information for us by the time we get to money management and risk management techniques very soon. So let's say, for instance, that we feel that price is not going to get to 60,000. We can use that as our stop loss. That price is not supposed to get to 60,000. So we put the 60,000 here. And this, and then if we feel that since we are selling, that price is going to be getting to 30,000. Remember, this is just hypothetical. You have not done any analysis to see this. So it's saying that we'll be getting $19,000 if price gets to that 30,000. And so once you have set this, you can then click on confirm. So immediately click on that confirm. You can see it has opened on the chart. You'll be able to see where you have set that if price gets to this 60,000, you want to be out of the position. But if price eventually gets to this 30,000, we are going to be making good profit. And that's just the simple way, or a very direct way to go about it. However, it is always advisable that you set your stop loss and your targets before you take the trade, and that's what we're going to be looking at very soon. So let's just close this one. Let's close it at the current market price. So I'm just going to be clicking on this market for it to close. So you can see immediately I click on market, it automatically closed it, and then it returned the amount of the maintenance margin and the margin balance that have been taken out of the account balance back, and we are see around our starting point. So let's say, for instance, that before you take the trade, you want to first set up your stop loss and target before taking the place, and that's when you are going to be selecting this TP and SL, TP and SL. TP for take profit, SL for stop loss. So that's take profit of 30,000. This is where we put it, and then the stop loss of 20,000 we want to reach about 5% of our account, and we feel that price wants to go down, and for it to be going down, we want it to take us out a profit when it gets to 30,000. And then if it eventually goes to, let's say, 55,000, we want it to take us out at stop loss. So with this, we are going to go by just clicking on that sell short. So by clicking on that, it automatically opens the position, and you'll be able to see about where your liquidation price will be based on your available account balance, and then your profit and loss account information right here, and then the maintenance margin and the margin balance is also available right there. And then of course on the chart you can see that you have where your stop market trigger will be, which is 55,000, and where your take profit trigger should be, which is if price gets to 30,000, it should take you out in profit. So if you want to close it, it's just very simple and direct. All you just need to do is to click on market, and then it automatically close you out. Now remember that we are on one way. You remember that when we went to this preference present position mode on that here, we only selected one way mode, we didn't select the edge mode. So this is how you see the effect of that. This is just explaining to you what that effect is. So let's say for instance I put one Bitcoin right here. That means I want to possibly buy or sell one Bitcoin. Let me just go with just buy one Bitcoin. I'm not putting any profits, take profit targets or stop loss area. Let's say for instance we want to close this position. There are different ways that you can. The first is you can use close all. I won't advise that you use close all if you have many positions open. For instance, you may have BTC perpetual contract open, you may have Ethereum perpetual contract open, you may have Litecoin and etc. So if you click on close all, it will automatically close all the positions, including the Ethereum, the Litecoin, and all that. And possibly maybe you only just want to close the BTC USD. So the first way you can do that is by just clicking on market, which is what we are already familiarized. We've already familiarized ourselves with that. You can also set your stop loss and target and etc. But another way to go about this is, we are on a one-way mode, and then since we are on buy position right here, if you want to automatically close this position without, let's say, this market order is not going through as you're clicking it or whatsoever may have happened, you can just enter the exact amount of the size of Bitcoin that you have bought around here and put it exactly around the same area, and then click on sell short. So you can see immediately I click on that sell short, it automatically closed it. Now if you have selected the edge mode, it is not going to close it. You're going to be having two positions right here, one for buy and then one for sell. But because you are on a one-way mode, by the time you take the opposite direction and also exactly with the same amount contract size, it's going to automatically close your position. And then if you take a trade, let's take another trade right here. Let's say that we want to buy just about 5%. We want to take 5% trade buy position. You can see that we have our profit and loss being showed around here at our entry price. Let's say for instance you don't want that to show on your chart. This is where you come to. You come to this area, and once you click on it, it doesn't show your entry position. So if for instance you want to see that your entry position on your chart and you can't really find it, you just click on this and then it will show it to you immediately. So let's close this one also, and you just click on market. So you click on market, it automatically closes it. So now that we understand what the market order is, let's go to limit order. Now, if you are going to be following my trade calls or trade analysis or trade signals, I usually give orders that's going to be based on market price, current market price. And the reason for this is that my trade signals or my trade analysis comes with watching candlestick confirmation first before deciding to take a trade. And so Based on that, we will first wait before taking that trade. We'll first wait to check if everything aligns very well based on our trading activity before we then, based on our checklist, so to say, before we then take that trade. But for instance, let's say we have identified a key level where price may most likely just get to and reverse, and then we may not be on the system at that time, and we want to place positions that price should get to and then trigger. That is when we use the limit order right there. So let's say, for instance, I'm going to draw an horizontal line here. So let's say, for instance, that we want to go long, and we feel that price is still going to come down to about this area. You can right click on this and then go to format to get the price level. You can right click on it and copy this price level. You can right click and copy. And so if we feel that price is supposed to get to that area, that means price is supposed to first come down here before it goes up, then we can use the limit order. So you can see what is asking us around here is asking us at what price we want to place our limit order. And anytime you place your order, it is going to be, you can see that we have order book right here. Anytime you place your order, these are pending orders, and Binance is going to try to match your if you are going to buy, if you want to buy the BTC perpetual contract, they are going to match your price with the pending sell holders, the best pending sell holders in the market, and until when they have someone that wants to sell around that position, around that price level, your order is still going to be in pending order, and it's not going to be on the position. It's going to be in open order because it is not at the current market price. They need to get someone else that wants to sell at your buy price, at your own asking price, so to say. So we are going to take out this, and then we are going to paste the 46,000 right there, and then we are going to set how much we want to buy, 5% of our account, and then it means that we are just buying about one Bitcoin, which is costing us about 4,000 now, now that it's a 3 BTC, and the maximum that we can take, the maximum BTC we can buy is 21,260 BTC. So and then we just click on the buy, and as you can see, immediately we click on the buy, you can see right here that what is shown right here is limits, which is the limit price that you say that we have put that we want to buy, and that we feel that price is going to first come down before it goes up. And as you can see, it is not at the open position, it is at the open orders. It's a pending order, so it's going to be added to the order book right here, which are the pending orders that people either want to buy or sell at. And it is only when they get someone that wants to, when price get to that area where you are getting enough sellers in the market that want to take the buy position before it then gets triggered. And so just like I said, if you are going to be following my trade signal analysis, we don't usually give trade signals and limit orders, because we usually wait for candlestick formation before deciding to go with that position. So let me just close this order right now, and then let me just close it. So immediately close it, it goes up. And then let us see, what if you made the mistake, you want to buy long below, you want to go long, but you want it to be below the current market price. However, you have put in a price that is higher than the current market price. That means instead of for it to be about 40 something thousand, you have used around, let's say, 53,000. So for instance, let's put the price here to be 53,000 and see what happens. And we are going to do the same thing, take it about 5%, and then we are going to click on buy. So you can see that what happened is that the position was triggered exactly at the current market price. You can see it is not under pending orders right here. It is under the current position, and it is because the reason is because you have stated a price that is higher than the current market price for a limit order, and Binance is going to assume the best available price for that position, which is the current market price. So let's close this again. Let's close this at the current market price, and then let's look at the second scenario. In this case, we want to sell at a price. Now, let's say for instance that you want to sell, but you feel that price is going to still go up a little before it then comes down. That means you feel that price is going to do this before it then continues downward. So you want a price that is higher than the current market price, which is what we call the sell limit order. So what I'm going to do right now is to move this. I'm going to move this up a little, and then we can right click and then click on format and then copy this price. So we can even just leave it as 55,000 or thereabout. 55,000 is okay. 55,000. So we copy this, and then under this limit we can change this one or paste it to 55,000, and then select how much we want to risk, maybe about 3% of our account. And then since it's going to be a limit order, we want it to be sell short. We feel that price is going to first go up. Remember that we feel that price is going to first come up to this area before it then continue downward. So we don't want to enter it at the current market price. We want it to go up a little. So we want it to be at a price above the current market price, and that's why we are using a limit order. And so we put in the 55,000 here, and then we set our 3%, and then we click on sell short. So immediately we click on that sell short, you can see that it is not on the current position. It is available at the open orders right here, and it's going to be placed on this order book pending the time price gets to that area, and we are able to get a buy position that is going to be matching the sell orders that we want to take in the market. And of course, if you go and mistakenly put in a price that is below the current market price and you want it to be a limit order, Binance usually assumes the best available price for a limit order. And if you put in something like around 40,000 and the current market price is around 49,000, which is better than the 40,000, Binance is going to be taking it as 49,000. But if you get it rightly and you get it very correctly, the limit order is going to be placed exactly where you want it to be. So let me just take out this one and then close this position. So you can also close it, close the position directly on the chart. Now we can also use the limit order to act as our stop loss or take profits, but that's a long thing if you ask me. It usually makes sense if you activate the TP or SL and put in your take profit or stop loss position immediately. But let's say for instance we just immediately just go long. We just want to go long, and then we put in, we are not on the limit order, we are on the market order, and then we want to risk about 3% of our account right there, and then we click on go long. So at this level, you can see that we do not have any stop loss or targets on our chart, and then we have the upper position right here. So what we want to do is to set our target using the limit order. It's a long process, but it's just for us to have some other understanding of how to set our stop loss or target. So let's say we feel that price is going to get to a certain level around here. We feel that price is going to get to a certain level around, so we want to take our profit around 60,000. So we can use the limit order for that effect. We just go to limit, and then for the price we are going to set it to 60,000. And then remember that we were risking 3% of our account when we wanted to take the trade, or we can just copy the same exact amount of BTC that we have under the size right here. That means this size of BTC that we have right here, we just copy or put the same amount in this area. So we have 0.595 BTC, and then we are going to be using a limit order. Now remember that the limit order is for we are currently in a buy position, and so we want to sell our position when price gets to that level. So we are going to go with sell short. So immediately we click on that, you can see that it has placed a position for us right here where price is going to be getting to hit immediately it gets to that level. And as you can see, we have it under a pending order. So what then happened is that because we are on one-way mode, we are not on edge, immediately price gets to this area, it's going to close out our buy position at the limit order that we have set it to be. So let's just close it also. Let's close the pending order, and let's close the current position that we are on right now. You can close that too. And if you want to set the stop loss, it's just this, almost the same thing using the limit order. If you want to set your stop loss using the limit order, it's almost the same thing that we're going to be doing. But in this case, we are going to be clicking on buy long at the price that is lower than the current market price, and we're going to be setting or closing us out at entry immediately price gets to that area. Yeah, so there's another feature here that you can see, which is called reduce only, and it's not something you should worry yourself much about. If you decide you want to click on that reduce only, what it's just saying here is this: if you don't click on this reduce only, and then let's say for instance that you have a buy position on BTC USD, maybe for 1 Bitcoin, and then you want to add to that position, you want to further take another position of let's say 0.5 Bitcoin. Now by the time you click on that 0.5 Bitcoin, Binance is going to automatically, instead of you to see 2 positions, it's going to automatically increase your position to 1.5. That means the size, your trading size as at that time, is then going to be 1.5 Bitcoin instead of just 1 Bitcoin. But if you are on reduce only, if you have selected reduce only, that is not going to happen. It means that whenever you take a trade, Binance is just going to automatically reduce the current position that you are on. So for instance, if you are initially on 1 Bitcoin, and then you are initially on 1 Bitcoin buy long, and then you place a position of 0.5 BTC. If you then click on sell short, it's going to reduce your current position. But if you go on buy long, it's not going to get triggered. And that's why you see that there's an explanation here: reduce only order. We only reduce your position, not increase it. And so most of the time when I take trades, I don't really click on reduce only, because I don't want to reduce my position. And that's just one key feature that you want to, because I feel that some of you may be wondering why this reduce only. It's something you don't really need to worry yourself about unless you really have a need for it. That means you actually want it to be that when you take a position, you want it to be reducing your position anytime you take it. But if you don't want that, then you don't select it or you don't activate it. So let's look at
I don't want us to waste much time on the Binance platform. We have actually looked at almost everything that we said we are going to be talking about, apart from accessing Binance on our mobile app. That's what we want to do right now, accessing Binance via our mobile app. If we look at most of all the things that we have to cover, we have talked about almost everything right there. We have talked about all this, and then this is what I just explained to you right now. Now, I understand the fact that a whole lot of you may not get it right on the spot, in this training right now, and that's why I made it available on YouTube so that you can rewatch, and then you'll be able to understand it then. But it's very good that you are in a live training right here. So just in case you have questions, you can immediately raise those questions to get clarifications on them. Or if you just want to go and watch it on YouTube and it's not live, you don't have that privilege. And that's why it's very essential that we come and then we ask questions if we have any. And so what I want to do right now is to try to connect my phone. I just try to connect my phone to the system so that you can see exactly how you can do that on your mobile phone. You download the Binance app, and then most of all these features that I've explained before, I'm going to be going through some of them. And then when I'm done, I'm going to explain the money management and risk management part of cryptocurrency. Now, I am saving the best for the last because I understand that, from the beginning, majority of the people that are not serious will first come, but then, towards the end, that's when you really get to see those that really want to take crypto market seriously. So that's why I decided that the best part is going to be towards the end. So what I'm going to do right now is to try to connect my phone to the screen so that you can see it, and then you see how exactly you perform all this on your mobile phone. But I don't know if you have any question right now. Let's first quickly address it before, as I am connecting my phone. Do you have any questions so far? If you have any question, you can raise your hand, and then I'll just unmute you, and then you can ask your questions. Anyone with any question? Okay, I believe we don't have questions, and I know we have questions actually, but because I was talking quite fast. If I don't talk at that pace, we are not really going to touch most of all these things I'm explaining. And by the time you get to the trading platform, you realize that there are lots of things that you don't really know, and which is what I don't want to happen. That's why I took my time to just explain everything, and then eventually you can go back and rewatch. And if you have questions, I'm there in the Telegram group to answer your questions. So let me just connect my phone right now, and then let's look at how to have this on our mobile phone. Okay, yeah. Right now, I'm going to show you how to operate some Binance directly on your mobile phone, and the beauty of it is that you can monitor your trades anywhere you are. You can take trades anywhere you are, and I'm also going to show you how you can make it quite easy for you to be able to do this. When we get to cryptocurrency trading, you get a notification of where the price has gotten to, and then what to do, and then take a trade. But for now, what we want to just quickly go through is how you can do the same thing right there on your mobile. That means how your focus is to just buy some cryptocurrency and keep for some time, and then after some time you feel that the price of cryptocurrency has started going down, or your analysis shows that you want to start going down. You want to do the same thing by converting it from that coin to a stable coin and stuff like that. So you can see right here that I already have. Binance installed on my phone. But if you don't have that features, if you don't have Binance on your phone, you can just quickly go to on the Play Store, and on Play Store you can search for Binance. So right there, you just search for Binance, and you'll see it, Bitcoin and cryptocurrency e-wallet, and then you click on install. But for me, I've already installed it. So if you have opened if you have your information on the website, you have opened an account with Binance, all you just need to do is to then log in, and you'll be able to see almost all the features from the web on your Binance app. So this is how it looks like. Immediately you get here, this is how it looks like. And now, so the first thing is this: if we want to start trading, we'll be going to click on features trading. We'll be clicking on features trading. If you want to start we'll be clicking on futures trading. But right now, what I want us to see is how we can move some of those coins, so our US dollar, and use it to just buy some coins and just keep pending the time. And then when it is time for us to sell it, we sell it. And so what we are going to do is to just simply click on this trade right there. We are going to select it, and once you select that trade, it's going to take you to this area, and you can see that we have this converse right there also in this place. Now you can use that same you can do that same action I want to do with this, but I want to just show you the easy way out, so that you don't get confused eventually. So we are going to click on that convert, and then it's going to take you to exactly the same or very similar to what we were doing when we were on the website on itself. So we are going to then change this away from BTC. Since we don't have BTC, we only have US dollar stable coin, and so we click on this, and then it's asking us that from what do you want to buy, as in from what currency do you want to convert to another currency. So if you want to buy Ripple, you just type the SRP here, SRP, XRP. You can see it right there. If that is not what you want to buy, any coin that you want to buy at any particular point in time, you can just scroll down and look for them, or if you know the name of that coin, you can simply just go with that. But right now, let's say that we want to go with Ethereum. We are just then going to select that Ethereum, and then we click on confirm. So it's just basically the same way. And so we have approximately $200 right now. And so what I'm going to do is to just say, put in the amounts that you want to buy right there, 100 USDT, and then it's going to tell you to confirm. And so it's just basically what we were doing on the website. And then if you don't quickly convert, if you don't quickly click on this convert, it's not going to go through. You have to refresh it before it times out. You have to click on convert before it times out. So that's just basically how you do it at any particular point in time. And then you do the reverse. If, for instance, let's go back. So if, for instance, you want to, the price of Bitcoin or the price of Ethereum or any other coin whatsoever that you have invested in want to start going down, you can then convert it back to USDT. So for instance, let's say that you have Monero. Let's say that you have Monero. I saw Monero now. Okay, yeah, here. So let's say that you bought Monero and you feel that Monero wants to start going down. You can change that Monero from Monero to USDT, and then you put the amount that you want to sell the USDT right here, and then you proceed. That's just how a very simple way to go about it. Now we are going to look at how we'll take futures trade while right there on our phone. So let me quickly go back, and then the very easy way for you to be, let me go back to the home so that we can start from the first page. So the very easy way for you to get to the futures trade, you can see right here, you have the futures icon right there, and all you just need to do is to click on that futures, and once you click it, it takes you to that page. And so just almost exactly the similar thing that we have gone through on the website is what we have currently in front of us right now. We are currently on the US dollar margin futures, and the next one is coin margin futures, option and battle. But like I said, we are going to be trading with the US dollar margin futures, and then this is where you select whether you want to be on a cross or you want to be on isolated, and we are just going to leave it on a cross for now. And then this is where you can change your leverage. You can change your leverage from 20x to maybe 10x or 50x or thereabout. Now, just like I said before, you don't want to take too much. You don't want to take too much leverage from the broker. I would just advise you to stay around 20 or 30. So let's just leave it at 30. You can actually type the 30x, and then you click on confirm. So we also have those features here. I've explained all this. If you want to take the market, I will advise you to change this from limits to market, because if you are going to be following my trade signals or thereabout, we are going to be using the markets order. That means we are going to be taking our trades immediately. And then this slider is where you can select how much you want to risk. Now, the reason why this is not changing yet is because we have not moved any money in our futures account. As you can see, we have not moved any money to our futures account. So what we are going to do now is to go to our wallet, and then under the wallet we'll be able to see we'll be able to then move money. You can see we have transfer here. So once you click on transfer, it will take you to this area, and then you can say, okay, I want to move money from my spot wallet to my futures account and to my futures wallet for me to be able to trade futures. And so you select this USDM futures, and so we currently have approximately $200 right there. So you can just click on the max, and I want to take the whole of how we have in our wallets to the futures wallet. And so it has taken money away from our spot wallet, and it has moved it to our futures wallet, and then we can go to our futures wallet back. So as you can see right here, we have as you can see right here, let me quickly just show you. As you can see right here, this area, we have our outstanding balance. We have our balance of our wallet to be able to trade on the futures market. Now, the next thing you want to do, let's say for instance that you want to move this money away from your futures wallet to maybe your spot wallet or thereabout. You can see there's another icon here which can take us directly to that same area where we transfer from. So you can change this one away from that means you can switch it over. As you can see, there's a way that you can switch it over. There's an icon that is showing right here. There's this that is showing right. That means you can switch it if they are not getting the correct order for you automatically. So once you click on this, it's going to change it. That means you want to transfer from your USDM futures wallet to your spot wallet, and it's going to ask you how much do you want to transfer, and then you can click on the max. So once you click on the max, or you put the amount there, and then it will go. But right now we are not going to be sorry. Right now we're not going to be doing that. We are not going to be doing that. We want to see how to trade right there on the futures market. So for instance, this is where you are going to be setting the risk that you want to take. So if you only want to take just 5% of your risk, that's 5% of how much you have. You can see that 5% of this 199 is just about $9, and that is how you are going to be adjusting your risk. And then of course you are going to select your TP and SL. So if you want to get out at, let's say for example you want to buy okay, this one is Ethereum Classic. So let's say for example you want to buy Ethereum Classic at around $31 right now, but we want to take profit around $50. So we are going to put the $50 right there, and then the stop loss is going to be some distance away from the the market price. So for the stop loss, we can decide to put I think about 25 there or thereabouts, and then we can click on buy long. But we are not doing that right now. Remember, we are not going to be taking trades without doing any analysis. Now let's say as we have right now, you can see that we do not have BTC USDT. Instead we are having ETC USDT, and you want to change the currency to BTC USDT or Ethereum. So you just click on this on that stuff on its own, and then it will bring out all the lists. And if you cannot find the list right there, you can search for it, BTC USD, and you can see it will show you right there. And then another feature that you get to notice here is we have this icon. We have something like this one right here, and we are going to be clicking it. So if you click on that, it will take you to the chart where you can see what is currently happening in the market. And based on this, I think the price of Bitcoin wants to start going up. but we still need to do our further analysis. I'm going to show you how you can know whether it's going to be going up or going down. But for now, I'm just letting you see those futures. And then the next one that you can see right here, just click on it and you see that you can immediately convert your USDT to whether the Ethereum or the whatsoever you want to convert it to. You can do that on that spot right there. But you know, that one is just as if for instance you are on the on the futures page and you don't have any money to trade. You can quickly click on that to transfer money into the futures trade and etc. So most of all these features that we have right here has initially been explained on the website, and it's almost the same thing we have right here on our mobile app. Now, when you take trades, you are going to be able to see those trades. So let's just try to take one example of a trade right now. And so we are on BTC USDT. That is, we're on Bitcoin perpetual, and we want to buy at the current market price, and we only want to risk let me just put about $30 here, 30x. Let me put 30x here, 30x, and then let me just I'm going to just risk about 5%. I'm going to just risk about 5% of it. So you can see how much it will cost you if you want to risk about 5% of your position. Now, if we don't have any leverage at all, it's supposed to be more than this $9. But because we have a leverage of 30x, that is why it's only costing us just this $9. So it means that if I take this trade right now and the price goes against me and goes to the stop loss area, then I'm going to be losing this 9.05. We are going to go into the detail of this very soon by the time we want to take trade. But I'm just using this one right now to show you how you're going to be placing your trades by the time you have done your market analysis to know whether to go long or to go short. So it's going to cost us about 9 USDT, and then the maximum I can trade, because it's BTC, is 0.110 Bitcoin. So based on that right now, I've not done any other thing. I've not done any other stop loss or target. So I'm just going to go long. I just want you to see what happened by the time I click on buy long, and you see that the position will be open down right there. So let's just go long, and then once you click on buy long, this is what happened. So you say the take profits will be triggered immediately. Please reset the price. The take profit, and okay, what happened is this. Remember, I was using this to explain when we were still on the Ethereum Classic page, and so that's why it was telling me to confirm if I still want to use that same feature. And so I've taken it out, and then you can see it has brought out the details of what I want to do. That the amount of the BTC I'm purchasing is 0.005 BTC, and then the mark price right now is about 53,325, and then liquidation, that means if price eventually go to 13,575, that is when I am going to be liquidated, and then it's going to be costing me about $9 for that. So you just say confirm, and then I'll confirm the buy position. So once I do that, it automatically take the trade. You see the success, and then you can see that my account balance right there, you will see that my account balance right there has reduced from the $199 to $190 right now, and you can see that I have my position open under the current position. So if I have used a limit order, it's going to be under this open order. That means that my trade is not executed yet, but since it's a market position that I've taken, that means instant position. That is why it is showing under the position, and as you can see right now, this is the information in front of us. So you'll see that the entry price is this, and then unrealized profit and loss, liquidation price, etc. So let's say, for instance, that you then want to put in your stop loss and SL. All you just need to do is to click on. That. And so when you click on that, it takes you to this place right there, and then you can put in the stop loss and the target price. So we have bought at 53,000. Remember, this is just an example. I've not really determined anything right now. Let's say, for instance, that our take profit is going to be at 54,000. So right there is letting me know that if price gets to $54,000, I'm going to be making a profit of $3.27. But let me increase to $55 so that you see. Now, if price gets to $55,000, I'm going to be making a profit of $8.27. Remember, I am only risking $9, and then I am making a profit of around 8.27, which is very roughly close to 90% of my risk. Then stop loss. At what price level do I want to go out? So I can set the stop loss to be, okay, I want to be out if price gets to $50,000, which is a price less than. So you can see that it's telling me that I'm going to be losing $16 if price goes to 16 if price goes to $50,000. Now you can see that my profit is much more lesser than how much I'm risking, and so that is what we are going to be discussing by the time we get to money management and risk management parts of this training. So once you are done and you have set up setting your TP and SL, you can then click on confirm, and that's just basically it. And so right now we have started moving in profit, and we are just in about 5% profit, and that is just how you keep on seeing your position on and on like that. Now, if you want to see your trade and you want to see how it is on the chart, you can just scroll up. You can see this that we have clicked before, this one right here. Once you click on it, you'll be able to see this information right there. And what else? Okay, there is this one bar under this place. You can see that there's a more, and under the more you can see most of all the different time frame that you can do your analysis. And then there's this one bar like a filter right here, so you can adjust it. But I don't advise that you go to those areas. You can adjust whatever you want to see right there, but it's best that you just leave it the way it is. Let me even select this and see what happens. Let's just go back. Okay, there's not much difference on it. So that's just, then if you want to view these whole charts, you want to view the whole charts on a very large view, then you can click on that, and as you can see, that's what you have right now in front of you. You can make it quite very big so that you'll be able to see exactly what you are doing. You can use it to know if price wants to go up or down, but this is very, very small for us to do any analysis. We are going to go into the details of how to determine price action quite well. And so that's basically how you're going to be taking trades. If you want to take trades, if you want to go back to the position page, just go back, and then we can go to check our trade. Right now we are just around about 13% profit. And if you want to close it right here, you can click on close position, or you can use close all. So let's just click on close position, and automatically it will close that position for you. It will ask you to confirm it, and then once you click on that, confirm sell, and that's all. Now for your own, it may not be bringing that confirmation, but remember that as at that period, when we were doing the settings on the web, I showed you where to select if you want notification or not by the time you are taking trade, and that's why you can see it's asking me to confirm before the trade is bought or sold. And so let's say, for instance, you have made profit and you then want to move this amount back to your spot wallet. All you just need to do is to click on transfer. So you can just click it on it right here, and then you can move your money away from the USD margin futures wallet to your spot wallet, and then click on the max. Like select the max, click on the max, and click on transfer. But I'm not doing that right now. I'm still going to use that to explain further to you. And so basically that is what you have. That is how the page look like on the mobile. You can always go home, click on home to see the home page, and then if you want to go to the features, you click on the features, And basically that's all. So the next thing we want to talk about right now is how to perform proper trading analysis before taking your trade, because it is very key that you understand the market well before you take the trades. Otherwise, you may lose your money. Now, if you have been trading forex market before, this one is even quite easier for you to make money. And so futures trading on Binance is basically, meant for people that are already trading the financial market on its own. They know when to buy, when to sell, they know how to perform the analysis. But if you are just relatively new to the crypto market or to the forex market or to the financial market on its own, it may take you some while before you understand how to do certain things. So I would just encourage you to not be that so in a hurry to start trading. You need to practice and practice very well. And I'm going to show you how you're going to do those practice and how you're going to do those analysis. And then it is when you are at the top of the game, when you know that you are now trading and you are making consistent profit, before you then switch to live account. And of course, I'll be there at any time. If you have questions, you can always chat me in the Telegram group. But before we go to the technical analysis part of crypto market, it is essential for us to understand the risk management and money management part of trading. And I'm going to let you understand what you need to do at certain period, and how to make sure that you don't overexpose your accounts to risk. And you see the logic behind most of all the successful traders out there. So let's go to the money management and risk management parts, and then after that we now look at how to take trades. Okay, so this is what we have. Let's quickly go to what we want to discuss right here. Now, I'm going to start with a very simple definition of what money management is, and then we'll also look at what risk management is. As you can see, what we have right here are two things: money and then risk. So we have money management parts of the training, and then we have risk management part of the training. So by definition, what do we mean by money management? And it simply means to preserve your capital. That's just the simple definition of money management: to preserve your capital in such a way that if you are not going to be able to win, but if you are not going to be able to win when trading, you shouldn't lose your capital. And so it means you have made decision to not excessively expose yourself to unbearable risk in the financial market. If you cannot win, you cannot lose. You shouldn't lose, sorry. So by way of comfort, we are going to only be risking 3 to 5% of our accounts anytime we want to take trade. That is, you spot a good entry, and then despite spotting that good entry, it doesn't mean that price is definitely going to respect your trade direction. No. As a matter of fact, you see that most of the people that are quite successful trading in the forex market are not usually right all the time. But what makes them quite successful is that they are able, or they are consistently applying money management and risk management whenever they want to take trade. And then by the time we have risk about 10% or 50%, about 10% to 15% of our account part for that period, then we want to take a pause until we see the outcome of that position. So what I'm saying here in essence is very simple. What I'm saying is very simple. Let's say, for instance, that you bought some BTC, that's some Bitcoin, and you had risk about 3% to take that trade. And then you decide to buy Ethereum, and then you have risk about 5% of your account to take the trade. And say you have decided to buy BNB, that's Binance coin, and then you have risk about 5% again on that. So it means that based on our overall equity size, we have 2% left for us to be able to trade. So let's say we are trading Ethereum Classic, and then we are taking about 2%. So at that period, you have risked about 15% of your account, and all you need to do is to wait for the outcome before you then take a new trade. That's just what I am explaining to us right there. So now the risk level at which you are setting determines the kind of risk taker you are. There are some traders that are quite aggressive, and they may set their the highest risk profile and the highest risk rates or tolerance to about 25% or thereabout. But if you are just starting afresh, I will advise that you just take 1 or 2 trades, which is going to be about 3% or 5%, and then see how it goes. When you then get very used to taking trades and you know your way in and out, and you've been consistently trading for some time, then you can increase it from about 3 to 5% to about 10 to 15%. Now, for risk management, what do we mean by risk management, and how do we ensure that we follow risk management most of the time when we are taking trade? Now, for risk management, we usually break it into 2: the risk part and the reward part. And the risk part is the stop loss that you have set, that you want to endure if price goes against you. And then the reward part is the TP. That means the take profit that you want to take if price goes in your direction. And so what we are saying here is that how much of your TP, which is your reward, how much of your TP covers your risk. That means your stop loss. How much of your reward covers your risk. So the higher the reward that covers your risk, the more successful you are going to be if you are taking a trade. If you are trading any financial market, if you always consistently target more take profits than your stop loss, and even if your trading system is just about 50% accurate, which we are going to see. We're going to see a practical example of that very soon. You don't need to have 90% win rate for you to make money trading the financial market. As a matter of fact, about 60 to 70% is okay. But even if your trading system gives you a win rate of around 50%, that means if you take 10 trades, you lose 5, you win only 5. If you are consistently ensuring that your reward is usually higher than your risk by about 1 to 3 risk reward, then you'll still be making money trading the financial market. We are going to see that very soon. And so I've just decided to give us like a guide on the qualities of what makes you a very good risk management trader. What I'm saying in essence in this place, for instance, we have risk reward, and then we have 1 to 1.5. What this one is saying is that our target is 1.5 times that of our risk. And so it means that if you take a trade and then you are losing just you're going to lose just around $50, it means that you need a risk reward that is going to be more than this $50 by 1.5. So if you take 50 times 1.5, that's going to be giving you $75. So if your risk reward, your average risk reward is just 1 to 1.5, you are just being fair. That means you are not really there. That trade that you are taking is not really the target that you are setting for that trade is not really LD, so to say, but it's not bad if you can still take that kind of trade. It's not bad, but it's not the best. And then the next one here is about 1 to 2 and to 2.9. That means it's just approximately 1 to 2.5, 2.6, 2.7, 2.8, 2.9, and up to 3. And that's a very good one. So if you target your risk reward around this range, it means that you are following good risk management when you are taking a trade. The next one is a risk reward that is higher than 3. That means 3 to 3.9, and that is very, very good. So the higher the risk reward, your risk reward ratio, the more it shows that you are consistently following ensuring risk management when you are taking a trade. As a matter of fact, you need to ensure that whenever you want to take a trade, your reward is higher than your risk. As far as your reward is not up to your risk, you don't want to take those kind of. And we are going to see a practical example of how that relates to when you want to take a trade. Now let's look at the basic features of risk, money management and risk management. When you want to take a trade, you want to first quantify your risk before taking a trade. That's what I've showed, I just explained. And we are going to go to the website back. We are going to go to Binance page, and you will see where you will be able to know in advance what your risk is and what your reward is before you take the trade. But let's continue with this. We'll go to that part later on. So you determine your exit levels before entering the market. It is very essential that you know where you want to take your trade from. You know where you want to exit the market from before you even click on buy or sell. Now, you want to avoid aggressive trading. That means you don't want to take trades that you don't want to expose your account too much to risk. You don't want to risk about 50% of your account all in one trade. That is aggressive trading. You don't want to hangar trade. The fact that you just lost a position does not mean that you should increase your risk. Does not mean that you should start fighting the market. You want to take it cool and easy. And also, you want to be very realistic. Despite the fact that you are setting a risk reward, you are trying to get as many risk reward. You are trying to ensure risk management when taking trades, and you are trying to make sure your reward is higher than your risk. It doesn't mean that you should move your targets quite too far away from where market will not get to. So if you feel that price is not going to get to that certain area before then coming against you, then why are you setting your targets that far? So what I'm saying here in essence is this: if you enter a trade at this point and then you feel that price wants to go up, and then market analysis shows you that price is not going to get to this area, and as a matter of fact, this is where it's supposed to get to, and then it may most likely get there and reverse. But then because your stop loss is somewhere around here and you want to target good risk reward, and then you are putting your target around here, what you then have in that scenario is that price will not get to this your target, and it will only get to this place and possibly reverse back to the entry, or even go back to touch your stop loss and take you out in loss. And that's not how. So you need to do proper analysis well before deciding to take the trade, and you need to be realistic as best as possible when you are taking that trade. So, and so most of the time, some of the times we are going to be wrong, and when this happens, we want to admit that we are wrong and we move on. Now, in trading in financial markets, just like I said before, even pro traders do have wrong moves. They do make wrong trades sometimes. And when this happens, they know, okay, it just happened at that period, and then they move on. The essence of this is that if you don't quickly move on with it, it's going to affect your psychology, and it's going to increase your emotions, and then you realize that you are just trying to fight the market to get the money back. And what then happened is that you realize you eventually lost the whole of your money. And so you need to understand and agree to the fact that you can be wrong and sometimes, and then move on. So that means that you always want to prepare for the worst anytime they come, and which is why they used to say that you should trade with the money that you can afford to lose. So if you know that $500 is just ideal for you to part with, and it will not do you anything, yes, you should just go with that. You know you have up to $10,000 that you can lose, and it doesn't really affect you, yes, it's no problem. But if you know that if you lose $500, it's going to affect you, then you want to trade with something like $100 or $200. But I will advise you that if you want to take trades on the Binance Future Market, you have a minimum of $200, which is why I have decided to practice right now with you guys with $200, so that you see how much you are going to be risking if you want to start trading, and how much you are going to be making when trading. But do not try to put in money that you know that if you lose that kind of money, it's going to affect you. You don't want to do that. But if you have enough money, like $10,000, $20,000, $50,000, $1 million, Binance can always accommodate all those kind of money. But make sure it's money that you can part with and it won't affect you. So you need to understand leverage and respect it. Now, yes, we have leverage available by our broker up to 125 times. That means if you have just $100 to trade with, and by the time you go with a leverage of 125, that is 125 about $12,500 or thereabout to trade with. Now that is not your money. Your money right there is just $100. The broker has borrowed you up to that level. So the worst that can happen to them is the worst that can happen. Nothing can even happen to them.
well, the worst that will happen is that you will lose that your $100. They will not lose the money that they are giving to you. So in order for them not to lose that their own part of the money they are borrowing you, they are going to move your liquidation price very close to your entry. So you want to understand that leverage is there and you want to respect it. You want to just take a few of that leverage and not just over leverage your account. Now, do not be single trade result oriented. You need to think long term. And we are going to see the interpretation of this by the time we go to our model, and you'll see that there are some times that you can even have series of losses. But if you are consistent and applying the risk management quite well, then you won't have any problem when trading the financial market. The reason for this is very simple. If you are just focusing on the result on one single trade, it's going to affect your emotions, and then you start fighting the market. And that is not a professional way to approach the market. The professional way to approach the market is to know that sometimes this thing can happen, but as far as I'm consistent with this risk management part of trading, in the long term, I am going to still be making money. So you focus more on the long-term results of your trading than on a single trade. So ideal capital risk is usually around, let's say, 7 to 15%. That means by the time you have risk about 7% or maximum of around 60% of your account, it is okay. But by the time you keep on, taking trades above that 15%, it is not healthy. You need to wait for the outcome of those trades before taking trades, and you don't want to take one single position with about 30 or 50% of your account. What then happens is that if price move against you, you have lost that money. So this is just a summary of the things you need to have in mind when you are trading, and you want to be money management conscious and you want to be risk management conscious. And this is what we have. We are going to go to our model right now, and you would see how it is possible for someone to only have a risk reward. Someone that has a risk reward of, say, 1 to 4. The person has a risk reward of 1 to 4, but you can see that the win rate of this account is just 50%. That means if the person takes 10 trades, there's even a possibility that he will lose 5 out of those 10 trades. But at the end of the period, the person is still making about 51% returns on capital. So we are starting with an account balance of $2,000, and at the end of the period, the account is now about $3,000, despite the person having lost 5 of the trades. And we are going to see how this one is possible for you to know that the most important part of trading is not really the strategy. It's actually the risk management parts and also the money management part. So let's go to the model, and we are going to look at different scenarios of what could happen when one is taking trades, and if we have a risk reward that is less than this, and then if we have a win rate that is more or less than this. We look at those scenarios and see that as a matter of fact, your main focus when trading should be on risk management. Okay, yeah, so this is the Excel for the risk management, as you can see right here. Let me move this one away. As you can see right here, the interpretation of what we have in this place is that, let us assume that the total amount the person is risking is 10%, which is what you can see right here. So it means that when we are taking trades, the maximum amount that we have risk is 10% of our account. Now, anytime we are risking 10%, we make sure that our take profits is about 3.5 times our risk. That means we are targeting about 35% returns anytime we are taking 10%. Or per trade. Don't let me even do per portfolio right now. Let me just use per trade right here. That means we are risking just 3% per trade, and then we are targeting 3.5. We are targeting 11%, which is 3.5 target. So what this is saying here in essence is this. Now, this is a very good example, because what we have here is an instance of someone that started with as little as just $200. As little as just $200. But at the end of the period, but as you can see right here, that the person had series of losses even before it made again. It had series of losses. That when it took the first trade,
the target, the stop loss was about $6, and then it lost that trade, and so the balance reduced from $200 to $194, and so the person had $194 left. And when he took the second trade again, he targeted about $5.8 at the 3% risk. It risked 3% of his account, and that's equivalent to $5.8. And then he still further lost it, and which is why we have $188 right there. And so it just keep on losing until when the balance is just around $166. So you can see right here that if the person has been risking more than 3%, let's say the person has been risking 10% per trade, and at this period, the person will have lost about 60% of their account, which is not ideal. And that is why you want to be sure that you are risking just about 3 to 5% of your account, depending on how many trades you want to take at a particular point in time. But then, anytime the person is making a target, the person is ensuring that it is at least 1.3 higher than its risk, which means it's targeting is risking 3%, but it is at any particular point in time is setting a target of 3 times that risk. So what then happened at the 7th trade? At the 7th trade, the person made a win, which was the first win whatsoever, and the win made a return of $17.49, taking the person back to 184. You can see it's very close to what we have right here. So your one win alone is able to cover for about 3 losses that you have encountered so far. So the person took another trade again, and then he also win, and then you could see that this $19 also took the person even above the starting point, $200. The person now has $203. So what I'm saying here in essence is that the most important part of trading is not really your win rate. You can see the win rate is very terrible. The person made 10 trades and then lost 7 and won just 3. And that's why the person has a win rate of 30%. But then even at the end of that period, just a 3 win alone still made a profit of $18, about 9% profit. So your focus should not really be on the strategy. Yes, we need to find a strategy that works for us and can give us a win rate of at least 50%. But what I'm saying here in essence is that even if you have a very terrible trading system, but your risk management is always at least 1 to 3 risk reward ratio, you need to lose about 8 times for you to then be able. You need to lose about 8 times out of 10 times for you to then not make money. So let's say, for instance, that we change this one to loss instead of win. Let's change this one to loss instead of win. You can see that is when the person can even just, as a matter of fact, the person only lost about 4% of the account despite losing 8 times out of 10. So your focus majorly should be on the equity curve. That means the long-term approach of your trading account, and not just the results that you are having individually. So if we decide to put this one to win, you can see that it's automatically adjusting the win rate. If I put this one to win too, that means what I'm trying to do now is to work with a win rate of 50%. So let's say the person has a win rate of 50%, which means if you take 10 trades, you win 10, you lose 10. You can see you are still very okay, about 41%. So what we want to do right now is to look for a trading system that can give us at least a 50% win rate. That's the trick behind trading in finance. But it's usually more than our risk anytime we want to take a trade. So this is how you this is what you do whenever you want to take it. You have that mindset at the back of your mind. So by the time we go back to the website right now, you'll be able to see that there's a calculator that will let you know how much you get when you want to take a trade, how much you would make when you want to take a trade, and then with that we can use that to know what our risk reward is. So let's go to the Binance page and check that calculator feature. Okay, now so we are on the Binance page right now, and Let us assume that we have done our analysis and we want to take a trade, and we've been able to see that price wants to go up. So I'm going to quickly try to take a trade right now. So our leverage is about 30%, 30 times, which is not bad, and then we are risking just 3% or 5%. So let me go with 5%. 5%. So this is the money management part of your trading. You want to just risk very little when you are taking a trade. Even if it make just about 10 or 15 percent, $10 or $15 in a day, by the time you convert it to equivalent in naira and all that, you'd see that it's actually quite, it's actually quite much. So we just want to risk 5% of our account, and then you can see that it's going to cost us about $9, and then we want to take a buy. So we click on buy long. So now this is what I want to show you. Now immediately we click on buy long, you would see, let me just move this down, or let me shift this one up a little. So you will see that there is this thing right here. There's this thing right here that lets you put in your stop loss or SL and calculate how much you'll be able to see it at a glance. So once you click on it, it takes you here. Now I've explained this before, so you just like a revisit. So we have bought it at 54,158, and then our target, our liquidation price, which is 54. What's our liquidation price here? 54. Let me just put 54,000 there, or 53,000. So with this, we are saying that if we lose this amount, our stop loss is about $6, roughly $6. So if price gets to 53,000, we want to be out of position. So we are only risking 5.79. So despite the fact that we have first taken a position using the radar, using that slider to set our risk, we can still adjust, we can still put in the exact price that we want to be out of the market. And then with this right now, it will give us an understanding of what our targets should be. Now, this is just the first way of just showing you how to do it. I'm going to take you a chart on the MT4. By the time we get to the you see the proper way to do it, how you know the exact price to put here, and how you know the exact price to put here. So I'm going to set this to, let me just use 56,000. So when you can see that when you set it to 56,000, it is just $9. Now, if you take your calculator, and you'll be able to see that for you to be able to get 1 to 3 risk reward, you need to multiply this 5.7 and whatever your risk is. So if we are approximating this one to be 6, then 6 times 3 is worth 18. So that means our target needs to be about twice this amount that we are putting right now. So with that, maybe our target to be about 58,000. Yes, so our target to be about 58,000. So by the time you look at what we are targeting to what you are risking, you'll see that it is more than 1 to 3 risk rewards. So 6 times 3 is 18. So we are going to be getting $19.2 for this trade, and we are only risking $5.79. So if you click on it, you can see that it shows exactly where your trade position is. So this is where the $5.3 is. That means if price comes down, 53,000. Sorry, if price comes down to this area, it will take you out by just $5. But if you leave price to eventually go, if you take the position and leave price to eventually go up based on how what your analysis is telling you, then by the time price gets here, it's going to be 3 times more than how much you are risking. So this is just, like I said before, this is just a first level of how to know what your risk reward should be. But when we get to MT4, you'll be able to exactly know how to know the price level that is going to be giving you a risk reward of 1 to 3.
Now, what you don't want to do, what some people used to do is that by the time price, let me change this one to 15 minutes time frame. So by the time price starts moving against them, they would quickly want to move their target away from that. Reward ratio would change significantly. It's going to change significantly. So that's why before you take a trade, you want to first check the risk reward to be sure that it's going to be giving you enough to cover your reward is going to give you much more enough to cover your risk. Otherwise, you don't want to take the trade at all. So if you increase your risk from that 53,000, let's say you increase it, you check it away from 53,000, you can click on cancel to 53,000, from 53,000 to 51,000. You can see that you are now risking $15 of your account. So by that mathematics, and to be sure that you are still following ideal risk reward ratio, you need to increase. It means that you need to also increase your target as well. And so let's try. We use 58,000. Let's try 65,000. 65,000. So with this 65,000, you can see 15 times 3 is about 45. So this 54 is quite much higher than 1 to 3 risk reward ratio. And then you can go with confirm. And right there, you can see that it shows that we have been quite aggressive in our target. Look at where the target is. Look at where the target is, and look at where our risk is. But what I'm trying to explain to us here is that if you want to continue following risk reward ratio at all times, increasing your risk also means that you increase your target. But sometimes we may not be able to get a risk reward ratio of 1 to 3. We can do with a risk reward ratio of 1 to 2, but make sure that your reward is usually higher than your risk. So for this trade setup, I can see in front of me right here, the ideal area for me to put my target is around this zone, because it shows that price has been coming down, and then after that it may most likely dance around this place, and then before it continue going up. So because it's going to first get to this area based on what it has done here, it can do almost the same thing before breaking out. I want to first take the target, then when it comes I want to go up, I can then look for another buy setup from that spot. So my targets should be about 56. So you can just draw an horizontal line and click on format and click on remove, or you click on the line and then delete this one. So you can go back to the property, and right here we will set our targets to what I've copied. So just paste it there. So I'll be getting $13 for this trade. So if I'm getting $13 for that trade, then it means that I need to reduce my risk. So my risk could be somewhere around 53,000. That's in 53,000. It's not bad. So 53,000. So just like what I told you, I'm risking about $6, and then I'm making about $13, which is roughly 1 to 2 point something risk reward ratio for this kind of setup, trade setup that I didn't take initially from the beginning of the trade. So which is what I have right here. Ideally, I would have taken the trade somewhere around here, so that my reward, my risk is going to be quite small, and then my reward is going to be quite big. But it's no problem. This is just for us to understand how to do that. And then what we want to do next right now is for us to go and do proper analysis. We want to see how we can take trade, how we can first analyze the market, and then know where to put our stop loss, know where to put our target, and how to automate it in such a way that even right there on your phone, anywhere you are, you can receive an alert of where price have gotten to, and then take trade right.
And so I think we should stop here for today. We have been able to cover quite a lot
I won't lie to you, it has not been easy. You guys can see that the financial market is not as easy as it seems. There are a lot of things that are involved, and then if you don't know most of all those things, you are not going to stand your ground. And it requires some practice, and it requires some time. You need to take your time and practice before you can really master the game. So by tomorrow, which is going to be the last day, we are going to open. We are going to download the MetaTrader 4, and then we are going to download some indicators on our chart. And let me quickly show you how that indicator is going to be like. Hold on 1 minute. Okay. Let me quickly show you that this. So this is what we are going to be talking about tomorrow. You will see how you can get notification right there on your phone. And whenever price has gotten to certain area like this or like this, you are going to be getting like this area too. It gave us green. You're going to be getting a buy or sell signal. So I'll show you how to do this setup and then how to link it with your phone so that you can get trade signals right there and then be able to take trades immediately you get those signals. And what we are also going to do together is that we are going to backtest this strategy. We are going to agree on where it's going to be as if we are trading a live account. And so I'll show you how you are going to get your entry, where you're supposed to put your stop loss, and based on 1 to 2 risk reward ratio that I've just explained to you right now. And then we'll agree if that trade is a loss or it's a profit. For instance, I may draw a line right here, which is where we receive the signal. And then this is where our stop loss is supposed to be. This is where our stop loss is supposed to be. And then our target is supposed to be about here, which is about 1 to 2 risk reward. So for this kind of trade right now is a win. If I draw another one right here, this one, you can see that this is also a win. Stop loss is supposed to be somewhere around here, and then our target based on risk reward of 1 to 2 or 1 to 3 there. So I'm going to show you how to open, how to do this setup, and then how to set it in such a way that you get notification right there on your phone. You know, something like this. This is a dashboard. On the dashboard, it's going to alert you on your phone whenever price has gotten to certain level, and then all you need to do is then come to your chart and see what price is going to do. Now, there are some courses that we are supposed to go through, but like I explained to you, it's not something we can talk about. I'm still going to come to this page tomorrow, but these chart patterns and this candlestick, they are very important for us to combine with our trading indicators. Now, if you are trading and you are taking trades and you are taking trades based on indicators alone, you are most likely not going to be making profit unless you are strictly adhering to your risk reward rules. But with the knowledge of all these price action techniques, you'll be able to filter out the bad ones from the signals and focus on the good ones, which is going to automatically then, which is going to ultimately increase your win rate. So what you want to do right now is to go to, I have made available the videos to be free for you guys to watch. You should go to club9forexacademy.com and then register there, and you will see that, okay, let me quickly go to that web page right now. You will see that the candlestick formation, the cost of the candlestick formation is free. I've also made that of the chart pattern free, but not all are free. But for this course, I'm going to be explaining most of all the things I have in that video free for us. And then a little bit concept of Elliott wave theory, and then harmonic patterns, which is the harmonic that you can see, and finally the oscillators, and then the market structure. These are some of the things that we'll look at tomorrow. And I may talk about the volume spread analysis and price dynamics, but what is of most important right now is that you go to the website, because I'm not going to be talking about this candlestick formations at all. I'm not going to. If I want to take this one, we are definitely not going to be finishing tomorrow. As you know, we are supposed to finish today, but it has to stay extended tomorrow, which I understand. And despite that, I've been very fast, talking fast, and trying to cover a lot of things. We still have a lot of things to cover. So if I go back to this chart right now, this is what I call candlestick formation. So if you are going to be taking a trade, around here, if we are going to be taking a trade around here right now, that we receive a signal around here, this is the candlestick formation, which let you see that when price got to this area, it started dancing and it gave us a wick. This means that it's rejecting that zone, in which case we are getting a signal from. And then by the time we have that confirmation, we are going to be buying the position. And then the chart pattern is this, which is what you are also going to be understanding tomorrow, where we have the shoulder edge shoulder pattern formation around exactly the same area where we have received the confirmation for us to buy long. So if you are following my trade signals or thereabout, this is what I usually do regularly, and I'm just taking my time to just explain it to you guys too, so that you can by yourself do that on your own. And it's not just for crypto market; you can use it in any financial market, as far as you understand the concept of the chart patterns and also the candlestick formation. You are good to go. So this is what we're going to be talking about tomorrow. Like I said, the best is reserved for the last. And I don't know if you have any question right now. I can take one or two questions before I close today's training. This is now 9 p.m. That's about 2 hours of training. Any questions so far, guys? If you have any question, raise your hand, and then I will tell you some notes, and then I can quickly just talk through it. But I understand that I was rushing with talking about most of all these things, so you need time to say watch it maybe 1 or 2 times, and then maybe that's when you have questions. No questions? Okay, we can save our questions to tomorrow. Tomorrow we should have, it may not be up to 2 hours, maybe 1.5 hours, because we have covered most of all the knowledge part, the money management, risk management. Most of all the knowledge part has been covered, especially the Binance platform. The main important part right now is the trading area, where you are going to be doing trade setup. So that will be tomorrow. So in the absence of questions, let me just let me check the chat. Okay, someone said just that you are fast. Yes. Just imagine that I'm not fast and I've just been trying to carry everybody along at their pace. We would not have been able to get to this point at all. It's supposed to be 3 days and now we are going to 4 days. So imagine if I'm not fast, it means we may be spending over a week. And like I said, it's a free training, and by Monday, I want to be free from this kind of training. I want to fix the markets, and so I don't want to carry stuff like this over to Monday. So I have to just make sure it ends tomorrow. So what you can just do is to rewatch the recording on YouTube, and then if you have questions, you can chat me up in the Telegram channel. Okay, so in the absence of any other questions, then let's call it a day. We see tomorrow, and then we agree on the time. I'm going to send a poll so that we can agree on the time that is best for us tomorrow, being a Sunday. Can we also get the link to the Academy in the Telegram group? Yes, the link is there, but I can send it to you right now, or let me even go there. Let me just quickly go there so you see it for yourself. Okay, let me just share the entire screen. And then, so on your browser, you just go to Club 9 Forex. You can see Club 9 Forex Academy. Club 9 Forex Academy. So I can copy that and send it to you guys. And copy that and send it to you guys, club9forexacademy.com. So if I go there right now, it's going to, I'll just log in so you see where the videos are, and then you can watch those trade videos, because I will not talk about it at all. So once you get to this website, since you are relatively new, you click on become a student. You click on become a student. But if you already have an account or you are my existing student, you click on login. So if you just want to register, just click on become a student. You put in your information there, and then you go to it's going to send a code to your mailbox. If you can't find it in your mailbox, you check your spam folder. maybe it's sent to the spam folder. So you put your phone number here, your email address, and that's all. But for me, I already have, so I'm just going to log in straight, and then you'll see how the let me use another account. Let me use this one. So you'll be able to see how the platform is. I just want to confirm if I made some videos free. Okay, this is the no, this is not where this is the what do you call it? This is the community itself. This is the community itself, or I can just click on that. I went to the community instead of the academy page. So just click on login, and then it takes me here, and then I click on this. So you don't need this part. This part right here, this one relates to the forex market. But if you still feel that you want to have an understanding of what the forex market is, you can go through that part. So just like how what we have been talking about for the past 2 to 3 days is what I explained here in the forex market. And so after that, we then started talking about strategies. So all these ones you can see, I've made them free. That's why you can see that they are free. So all the candlestick formation background, all those things are free, and those are the things that you need to watch out for before you take trades. And then the chart patterns, the first one is free, but the other ones are not free. But I'm going to be mentioning them tomorrow so that we have a good understanding of what they are and the most important role that we need to focus on. And then if you scroll down, you'll see oscillator conference strategy, momentum divergences, this one right here, you see it right there, is also free. So if you get to this one also is also free. So you just click on any of the videos to watch, and then you'll be able to watch it. So once you click on it, it shows you the video at the right-hand side, or if you're on your phone, you scroll down to see the video, and then you can just click on it, and it will start playing and explain most of all these things to you. So I feel that by you may not have been able to watch. You may not have been able to watch. You may not have been able to watch the recordings, the video before tomorrow, but at least have it at the back of your mind that that is part of what you may need to do in the course of this training. So, any other question?
Early traders, welcome to Oscillators Conference Strategy, OSC 101.
So we see tomorrow, guys. I think I've tried for today. It's already past 9. We see tomorrow, and take care. Good night, and bye to you guys.